All right, already. Well, we're back with our regularly scheduled Sunday evening communion. Thank you all for joining us live. And those of you watching on the replay, hey, thanks for popping in too and hanging out with us to see exactly which stock we sold out of. Mm-mm. I like to, yeah, I just saw in the chat. So you guys were talking about KC and Shamir. Hey, by the way, before we go any further, those of you in the chat, let me know about the sound. Make sure that the sound is sounding all right because I don't want to blow your ears out of the speaker here. And there we go. Okay, I'm old school. I know. I got to have my phone here to make sure I'm broadcasting and connected to the rest of the world. So a lot of cool things going on in the market. We exited a bunch of positions. Those of you that get good, thanks, Dan. Those of you that get the newsletter, this isn't going to be a surprise, but I'm going to share Simply Safe Dividends and a few things we didn't share in the newsletter, and then get to talk with all you beautiful people. Hey, what's up, Darth? We got Darth in the house, and so I'm still reading, dude. This book is amazing. This is so good. If you haven't read the Snowball, the about, come on, focus. I guess I gotta hide. Either way, shiny cover, dude. Look how ginormous this thing is. It's a book, 900 some pages, and it is just fantastic. I'm really enjoying this, and I'm going to be spending some. You know what? Maybe we'll. Is that too reflective there? There we go. We'll have Warren watching over the rest of this live stream, so we'll have Warren watch. Yeah, I highly recommend it. It is on audiobook. I was just informed my teenage daughter that Spotify has audiobooks, which I have not looked into. That's a bit of breaking news for me. That yeah, Tim, it will take a minute. I did see somebody, it was John, mentioned about Shamir and KC. KC is still around. We talk, we email every now and again, and she actually just informed me that one of her favorite stocks, which is Atcor, ticker ATKR, is I think they do wire and steel, stuff like that, that they are about to initiate a dividend. And I haven't looked into it, but on the Quarter app, I do have stocks that are, or everything that goes through the Quarter app, I have it set up so that anytime dividend is mentioned, that it will just send me an alert. And I did see Atcor pop up, and it said dividend was mentioned like 3 times. So what's up, Stan, SCHD Stan Craig? We got to have you back on, man. It's been a minute. All right, here we go. Away we go. We got a few, enough of that going on. Enough of the hubbub. So it was Intel. I finally got out of Intel. I don't know how many of you are still in Intel. If you're a believer, if you understand the business. In the newsletter, I kind of laid out exactly why, is that I just don't understand the business. And I'm really, really trying to think. And Kevin sneaks in. What's up, man? I'm really trying to think like an investor and not a price speculator, where, again, going back to Warren, the watch fly with Warren back there now. I love it. He, like he said, if he wants to understand the business so he can model out and project out 5 years, 10 years from now. And if he can't understand the business, he can't project and confidently feel where they're going to be at in 5 years. So like he says, if the stock market were to close, would you buy this stock if you knew that it was going to close for 5 years or 10 years and you couldn't sell it? What would you do? We got the two Kevins snuck in together. Oh, no, funny business. I don't care. You each your own. But if you wouldn't own a stock for 5 minutes or for 5 years, you shouldn't own it for 5 minutes. That's how it goes. But real quick, I want to know what you guys, we'll get back to you, what you're doing with Intel. I'm going to go Simply Safe Dividends real quick here. Show you, it's a turnaround. It's really a turnaround. And then on Charles Schwab, by the way, it's one of the platforms I really enjoy. They give you free equity analyst reports for Morningstar. So I'm going to just give you a little bit of a taste of that, show you how to get that. And we will Yeah, good. Oh, Jay, you sold out of it. I'm excited to get back to you guys and talk. But for those of you watching on the replay, not really going to care that much about the chat we're going to have afterwards. So real quickly here, some of you with Intel, feel free to pause the video. I'll just I'll kind of breeze right through it with Intel. And here we go. You know what I didn't do? Son of a gun. I need to give you more real estate to work with here on the screen, because I'll make this bigger for some of those of you that may be on mobile or not. I don't know. Either way, so they give it a 60 borderline safe score. Obviously, it had that 66% dividend cut. And yeah, it's at 43.81. It's at a 52-week high. Mizuho, which is an analyst firm, they upgraded it from what I understand. They gave them an upgrade. Sorry, think of upgrade from Idiocracy. But those are some stats there. During the last recession, they were down 49%, while the S&P was down 55%. So about even. 16% 20-year CAGR. Not bad. Obviously, we don't like to see that dividend cut that did happen. They went ex-dividend November 6th. So for those of us that sold this week, we get that next dividend. For me, it's going to be a whole $12.50. I'll try not to spend that all in one place. But either way, just a little bit of nice icing. And yeah, their dividend yield currently 55% below. That PE is just... dude, that's way up there, 25.8. You're right now buying here if you're investing. You're paying $25.80 for every $1 of Intel's earnings, which, as you'll see, is not much to speak of right now. Yeah, the free cash flow payout ratio, negative. The earnings payout ratio, 163%. I like to focus on the free cash flow. It's more of like the ugly truth kind of number is the free cash flow number. Earnings per share, last 12 months, 60 cents. Not very good. Free cash flow per share, getting worse. It's projected to get better. We'll see if that comes to pass, because obviously the analysts don't have information on the next 12 months. It's their guess. If they did, that would be pretty amazing. I'd love to see that. But yeah, negative $2.50 in free cash. Not very good. Just junky junk numbers all around. Earnings per share growth. Yeah, I would hope it's going to be 183% the next 12 months, going from negative 79. Yeah, sales growth is just down. Everything's just, I mean, you'll just see this. They're actually diluted shareholders a little bit, going from 4.12 billion to 4.17. Total sales is compressing. That's coming down. Return on equity is negative. Return on invested capital is negative. Just buckets of yuck. I mean, it was nice for a while. And so 2018, they started progressively going down, down, down. So this has been coming for a while. Yeah, just everything negative free cash flow margin. I guess their only saving grace may be that they only have 19% net debt. But still, I mean, it's up. It's up from where they were at 12%. It's just yuck. Net debt to EBITDA, 2.04 years. I mean, that you could see that's so much higher than it had normally been. And yeah, I'm sure it'll come down. And then last, the interest coverage ratio. They currently don't have enough to cover the interest on the debt. So that's probably maybe where some of the share dilution is going towards until they, tread water. But just yucky. Ugh. And then if you're on Schwab, I had to make sure none of my information's here. If you type in a ticker symbol like I did with Intel, it'll bring you to this page. So, excuse me, they give an F. So there you go for that. But if you scroll down and keep to the right, you'll see Morningstar. They have a 3-star rating, no economic moat. But then there's this link right here, which is pretty cool, which is the equity analyst report. So if you click on that, the countdown's on, people. November 28th, that's when my new computer's coming. And this is the last thing we'll look at here. But this report, Kevin Burgess, he shows these a bit. But I think he subscribes to Morningstar, right? By the way, I tweeted out a picture. I was in Chicago yesterday by Morningstar's office. I took a picture. You could see I got legs and feet. It's crazy. fair value estimate $40. So it's a bit overvalued right now. Obviously, the last price here is from October 27th. Fair values. I actually got rid of alpha spread. 162 bucks. I felt like, you know what? I was just using it for the fair values. But there you go. They'll show you the star ratings and where overvalued, undervalued. Last thing a lot of people like from this, they give their whole little write up, the strategy and outlook and whatnot. But the bulls say, anyone who wants to pause this, you can see the end of October what they were saying. They'll have the bulls say, and then they usually have the bears say. I don't see the mama say. There's a bears say. That was a Michael Jackson. I don't know. Somebody remind me. Got to be studied something. Got to be. And anyway, so there you go. And then the economic moat, they no moat rating. So kind of an interesting thing. If you have a Schwab account, you can do this for any business, and it's just, again, they don't know the few. Then they also have a few others: Refinitiv, CFRA. You can get the CFRA stock report, Argus, and Market Edge, and Vickers, and I think that's it. Yes, that is it. So very cool stuff. And that's that. So I did sell the 100 shares of Intel. We had a cost basis of $41.65. And I set it initially for $42.65. And I thought it wouldn't get there. So I was like, you know what? I don't want to be greedy. I was talking with my buddy, One Harris at a Time podcast. Please, One Harris at a Time. No, One Penny at a Time podcast host, Harris Elliott. And about a year ago, I told him that I was like, dude, if I could just we were at 40% down on Intel. And I said, if I could just get back to down 10%, I would be so happy to exit. And here we are, suddenly green. And I was like, give me all the money. Like, let's go for 50. Let's go. And I ended up saying, you know what this is? I'm feeling an emotion of greed. And the last time I felt this was when I was in the casino down in Aurora or Joliet, either one. And I was watching the little roulette. It's been like 2 years. I don't go much, but I was watching the little roulette ball bounce around the roulette wheel. That's the same feeling I was having with Intel. And I was like, I'm not investing. And as the man back here that's overwatching this live stream said, Warren Buffett says, when you're investing, you're thinking about what the business will produce. But when you're speculating, you're only thinking about what the price will do. So when you're focused only on price, you're speculating. And again, I've tried to understand some of you techie guys out in here. You might understand Intel, but I just don't know. I don't know what makes their chip better than I think it was Tim said AMD or, AMD, NVIDIA, TSMC, the M3 chip from Apple. I just don't know. Like, I understand like a Walmart or a Target or a Home Depot and a Lowe's, just things like that. So, look at this. Ken, here we go. I haven't talked to you yet, Ken. So you think Intel is going higher. What is your price target on that? What do you think it's going to go to? Just ordered Snowball. Yeah, Drake, it's pretty good. I got mine from the Woodridge Library here in Illinois, and hopefully nobody wants to borrow it. But yeah, what are you guys doing for Thanksgiving? We had talk with our family of going with my in-laws, looking for in the Michigan area, Tennessee area, looking for an Airbnb to go to for Thanksgiving, but it was getting expensive. And then everybody just said hey, why don't we go to, my wife, why don't we just go to my wife's parents' house and stay there for 3 days? So we're doing that. We're all going there. We're going to hang out. And I should get some time to read some more of my book, because everybody knows I like to read, and it's the holidays. We're all relaxing. But here we go, Ken. I like it. You think Intel will be able to produce chips in America? A huge advantage. I think so too. And you know what? I don't remember what I did say what ETFs had. So SOXX, FEPI. there's a lot of, I know it's not an SCHD, Craig, if you're still watching, right? Intel's not an SCHD, but I just don't know, man. I don't know. And from the numbers I look at the business, we're expecting a turnaround. And a lot of times the businesses don't turn when they're supposed to be doing turnarounds. Let me see if I missed anything important. By the way, thanks to all you guys joined us in the chat. This is a really fun discussion. I'd love to know, because suddenly Intel is just that hot stock, just flying up, new 52-week highs. And I've looked on the chart. I'm not going to pull it up for you guys because I'd have to kind of mess around and get it to what I wanted to show. But I think it's in that overbought range. But in the short time, it looks to me like it's kind of going to peter out here in the mid 45s. So yeah, I would, good, Bill. Okay. Just wanted to throw these on there for you guys that you sold Intel to, or, you're thinking that Qualcomm, they are solid. They don't just do chips, do they? The Warren Buffett Way by Robert Hagstrom. I have not read that one. I did read the one by, I can't think of his name. He did the Lowenstein, Roger Lowenstein, is it? That Buffett book? I don't remember. C or Cat? C, Cat. Yeah, we are talking about Intel. I'd love to know, like, the cool thing, right, is that those 100 shares I sold, somebody bought them from me. I don't know who, but it's kind of a fun thought when you think about every time you buy a stock. I've been buying J&J. I want that to 100 shares. We're at 60 now. And I got a lot of cash because we sold out of, if you get the newsletter, Celanese, we exited that. We only had 10 shares left. We got out of Celanese. Target, we exited this week as well after they had that pop. And then Intel. So we've got a lot of cash. We're dwindling those positions down. Oh, dude, Tim, I wish I had it set up. I need to have Fredo set up in here. I didn't upload the clip into StreamYard, and I don't want to take a chance. Dude, look at this. Great minds think alike. You sold Target on the pop, too. Frank, Kimberly Clark, they're going to be around a while. I know they had some issues. We had used to hold them, and we sold them to, I don't remember what we bought, but that a couple people gave us, a little bit of, I don't know, flack, but just pushback saying like, hey, you were just saying you're buying Target. Somebody said to hold forever. I'm like, I never said I'm holding Target forever. Really, you should only be thinking about selling if you've made a mistake and you've made a mistake, I think, or you have something better to do. There's a better opportunity. And that's why when people look at Berkshire and say like, hey, they sold J&J and Procter & Gamble, it wasn't that big of a position, but if they have a better opportunity, why leave the cash sitting in something that you think is inferior to an opportunity available right now? So, it's all your own game. It's all part of investing. Yeah, I don't know, Kat, if I don't know if that Target going woke is that big of a thing anymore. It could be. It never bothered me, but same thing. They have a bit of debt. I think the main difference, right, I think between Walmart and Target is grocery, where, correct me if I'm wrong, somebody, but isn't Walmart the United States' largest grocer? I think that's Jim got the Warren Buffett. Oh, dude. Yeah, for those of you watching, Richer, Wiser, Happier by William Green. Fantastic book. Fantastic. Kevin, we got to talk again, man. Oh, by the way, just noticed the PepsiCo shirt. Yeah, this one's my, don't tell anybody. This is my pajama shirt. So, Oh, Audible. You know what? Audible, does anybody pay for the Audible? I didn't like getting stuck with a book at the end of each month. I used it for a couple months. So, good. Cool. John, ExxonMobil drilling the first lithium well in Arkansas. That's an interesting thing. And I like that it just goes to show, like, what we talk about here is that all of these businesses are living and breathing. and they're going to do what they have to do to try to survive and try to keep competitors out of the moat. And it's just, every business is always under attack. Like every business is trying to be put out of business from day one, pretty much. So it's kind of an interesting thought. Yeah, I like this. You guys talking about Intel. I don't know that, and that's the problem. I have a pretty strong conviction that both Walmart and Target, just to use them for an example, that they're going to be here in 10 years. I can't really envision a scenario where Walmart is out of business or mortally wounded or crippled. It could happen. Anything can happen, and that's why any equity, any business is risky. And I think if you don't want to invest in a business, you don't want to do the work, hit the easy button, baby. Just ETF it. I'm going to be putting a video together for it's going to be an interesting one because I want to do it for you, for anybody that wants to know, but probably more for beginners. But I want it so my daughter and my brother-in-law, because he actually said, like, I should have started investing, but I don't know where to start. He's like, if only there was somewhere I could learn. And, it's at me, but I need to make a video and explain that if you don't want to analyze a business, go to your downtown, wherever you live. Imagine your downtown area trying to invest in individual businesses that you see in your downtown area, or even think of LA or Chicago, whatever. Just stick with it. Just think of how the payoff can be bigger, but it can be a lot riskier picking an individual business to invest in. But if you don't know how to do that, what if there was a way that you could just buy a little sliver of all of the businesses? And even when a business goes out of business and the new one comes in, well, you'll own that one too. But the thing is, like with the market cap weighted ones, all that means is the bigger businesses, you own more of them because they kind of float to the top. So, the ETFs, it's just a basket of stocks, but you could own every business in town if you wanted to. That's the beauty of them. And I'm trying to explain that to my 15 and 16-year-old daughters and my brother-in-law. Let's see. AMD bought it in 2014 for $360. That's got to be a really good deal because they're up around 100 now, right? I assume that's at me. What are you buying with the sold shares? I'm buying right now predominantly J&J. I debated because they go ex-dividend tomorrow morning. They go ex-dividend, but you had to have bought the shares and held them by Saturday. So for those of you watching, if you don't know how an ex-dividend date works, I believe you can still buy them in the pre-market before the market opens. Someone correct me if I'm wrong on that, but my rule of thumb, when you see the ex-dividend date, I make sure to hold the night before. But J&J is what, $1.19 or $1.36 a share. They're going to open up. No, that was the ex-dividend. Yeah, so the ex-dividend date. Tomorrow morning, they're going to open up down the amount of the dividend because it has to be paid out. But big companies like that with a lot of volume, the share price recovers really quickly. So we bought 20 shares of J&J last week. And, some people are worried about them. But again, I'm looking at the business. I think they're going to be just fine. Even if they do have a significant lawsuit to pay out, it's going to be spread out over 10 years, 15 years, some of them 20 years if you look at past litigation scenarios from what I've researched and read. So not really worried about it. Dude, Craig, we still have to watch The Last Dragon, man. We still got to watch it. So they are not in SCHD. Thank you for that. Craig, do you have every SCHD position memorized? I'd like to test you on that. That'd be a neat party trick for people that don't invest and could care less, right? Oh, cool. Ken, this is the first time we're talking, so you are buy and hold. So you're going to hold Intel for quite a while. All right. Nice. What are you guys doing? What's going on? Where are you going for Thanksgiving? Anywhere? What are your plans? What are you buying? Yes, you're that hearing my voice and watching. Just put it on. We want to all see and know. As I'm going to get cut up here. TSM has done well. They have done well. I don't remember Tim. Target. Tim Target. Target Tim. Oh, that's right. Samsung has a chip plant too. Yeah, it's just think of that. I mean, off the top of my head, you've got Intel, TSM, AMD. I don't think Skyworks. Skyworks doesn't do it. Qualcomm. Did I say Texas Instruments? Samsung. There's got to be what 8, 9, 10. I know there's some smaller ones that I'm forgetting. Microchip. I think Microchip is one. There's so many of them. It's so many. Bought Target for the dividend, but regretted it. Yeah, you know what, Kat? I don't know if you're a newer investor, and I've made this mistake too, and it stinks. But back in the early days, I bought things just for the dividend. But the only thing I would tell you, don't regret it if you use this as a learning opportunity and a lesson learned. Just remember, never buy a stock for the dividend. Buy it for the business that pays the dividend. So when you start thinking about the business instead of the dividend, I think things can become a little bit more clear. And that was, hindsight being 2020. That's why it was a lot easier for me to sell Intel, because I knew that I was just speculating on price and I didn't want to get out with a loss. So I'm thankful to have gotten out with a small gain, kind of like a bunt single. That's what we got out, a bunt single, all the dividends received, and a very valuable lesson to remember that if I'm only watching the price on something, then you're speculating on price and you're not investing in the business. So good. Walmart is the biggest grocer. Thank you for that, Timothy Smith. Do appreciate that. And that's funny because I think, Clifford, that once, I think it will go through the, oh my God, I got to get caught up. I'm so far behind here. I think when they combine, they're still going to be like number 4. So I'm going to just skim through here, see if there's anything important. Kevin, yeah, groceries not diversified. It's small. It seems expensive to me. Is lithium stocks back on a trend? Pat, I'm always going to put this up, man. Don't sorry for my loss, because you know why? Jamar Gibbs. I had the Lions running back. That's the beauty of fantasy football and why I'm probably not really considered much of a Bears fan anymore. I don't know who Kirsten Potter is. Interesting that she reads Audible books. Could be a nice job to look into. I do think, Ken, J&J is a no-brainer. It's beaten down. They're facing headwinds, especially too. I think one that's not mentioned a lot is that Stellara hitting the patent cliff. But J&J, from what I was reading, has 25 platforms. And this is post Kenvue, after Kenvue. They have 25 platforms that bring in at least $1 billion in revenue every year. That's pretty stout. That's between the pharmaceuticals and the med tech, the medical devices. Yeah, I just think they're going to be okay. They're going to be fine. Good. I'm sorry, guys. Hey, what's up, Sam? Nice to see you. Very cool. Happy to have you here and chatting. And okay, Kevin. Dude, I always love Kevin's opinion. You got to check his channel out. Got to check Kevin's Burgess's channel. Intel's trying to be a manufacturer and designer of chips. Right, because now don't they usually just manufacture but not the designs? Who was it that designed? In the 90s, they still get royalties. I forget the business that was a designer. I read a news blurb a couple months ago. Maybe somebody will remember who they are, but yeah. Oh, they're part of your SOX ETF. Yeah, and I think that's the way I would do it. So there you go. Because I don't understand which chip manufacturer will be the best and what makes them unique, then just buy them all, right? And, it's funny because Warren talked about this with the pharmaceuticals, because a lot of us, most of us aren't going to know or understand how to evaluate the drugs in the pipeline of a pharmaceutical company like Merck, Sanofi, J&J. I was going to say Procter & Gamble. I hope they're not in that. But What was the other one? Oh, I had it. GlaxoSmithKline, Bristol Myers Squibb, Eli Lilly. One of those. Just we could stop the naming there, but because we don't know, it's Warren Buffett says the best time is just when they're down, when they're undervalued, when they're at a good price. And one of his mistakes was being stubborn and not paying up a little bit for a quality business that he thought was great. And you just buy those pharmaceutical companies when they're trading at really good valuations. I did that with AbbVie. That's another one. And you don't know, like it's likely to be more risky buying a pharmaceutical company, from my experience and what I've seen, when they're at the top, like a 52-week high. Usually something really good's going on with them. But yeah, because then little things like this can happen and then they'll get knocked way down. So just try and buy them when they're low. I think J&J is low. Preferably, I would be pleased as punch if we see 141, 140 this week. I don't think it'll happen, but now that I'm buying, I want everything low. And then the split second I'm done buying, do you ever feel this? It's like the split second I buy a stock, I want to see it up now. Like I want it to go up. It can't go down. And that's one of the reasons why Manish Pabrai says he will not buy stocks when the market is open, because there's too much emotion watching the numbers flit up and down, flit and flicker up and down. So he only places buys and sells when the market is closed, because then he's taken the emotion out of it. I like that. I should do that because yeah, I get I'm human like you. I'll buy a J&J share and then it's $1 cheaper like 5 minutes later. And it's like, son of a bitch. But it's okay. It's all right. So Craig checking back in, does not know every SCHD holding, but he does know the big ones. Well, Craig, there you go. Next time, you're going to need to learn the exact percentage, weighting, and order that they all line up on that day. So if you really want to be hardcore, man. Late game hero. What's up, man? Buying O. Yeah, we actually bought couple more shares of O, and I just realized in my haste that I forgot to put in my newsletter all of the stuff we bought, because I only put the bridge account. So oopsie. We did buy like 2 shares of Realty Income and another share of Vici, and that kind of stinks that I'm just realizing this now. And then the dividends we received, the individual ones, and how much. So you know what? And I had it here too in my notes. So I'll tell you guys here. We received last week $17.50 from Celanese, $53.28 from AbbVie, $50 from Enterprise Products Partners, EPD, $1.32 from ACI, stubbornly holding those 11 shares, $40.19 from Realty Income, and $35.25 from Main Street Capital, for a grand total of $197.54. So I hope those of you that read the newsletter, you can forgive me, but I'll put it in next week's if I remember. But you know what? So yes, I am buying O2, so that's cool to hear. And you are, you're until you hit $100 in payout. Nice. Yeah, that's a goal, man. You got to have those goals that you are reaching for, and we love hearing it. I love hearing your guys' goals, Cisco. Yeah, Cisco got beaten down a little bit this week, right? I heard the fund manager for DIVO, he was on the Compound and Friends with Josh Brown and Michael Batnick. Really cool. Kevin, I forget his name. Sorry, but I doubt it. I highly doubt he's watching, but yeah, he just talked about they bought some Cisco and then they pretty much got beaten down after their earnings. I 100% agree with that, Derek. That for me, there you go. If I wanted exposure to chips, I thought of shout out if any of you remember chips with with Punch and dang this memory. That was when I was a little kid. The California Highway Patrol TV show. Just silly, like late 70s, early 80s show. But yeah, it's better to be in a chip ETF. So I agree. But if, hey, there's some people that have a deep understanding of the businesses, and it sounds like Cat, like you're saying, Sox ETF. Cool. Holy cow. So SMH has 24 chip makers. Wow. Wow. That's, yeah, it is too Mad Money podcast. I've never listened to that. That's Jim Cramer, right? Ringing the bells and all that. All right, let me see what you guys got going on here. Let me know. Oh, he does. That's not his new one, is it? I know he stopped putting out videos for a bit, so I don't know if that's one of his older ones on J&J, but yeah, shout out to the Dividend Talk podcast. Fun guys. Too bad I didn't get to meet up with Derek, Engineer My Freedom, when I was over in Ireland. Okay, Tim, you're all about ARM. Billy. Oh, dude, I didn't get to your last message, but when I put out the railroad stock video, like we talked about, what do you guys think of that? Did you catch it? Did you check out the spreadsheet? I think that could be an interesting way. Let me know if you find it useful or helpful to put that information and, kind of look at how a business is performing, essentially the trailing 12 months versus their 10-year averages. A CBDC when? I don't know. Maybe if and when too many people start moving to Bitcoin, kind of like they did in 1933 when they made it illegal to hold gold. They outlawed it. That could be. The government doesn't like competition. So when Bitcoin becomes too competitive with the US dollar, that's probably when we're going to see it happen. But, that's macro. I'm not big into the macro because too many things can happen. Don't tell my friend Ari Gutman I said that. He has his little macro matters. I shouldn't say his little. He has his big macro matters. He likes it. And for me, again, I'll side with him. He said Alan Greenspan, who was one of the former Fed chairs, had said, he said Alan Greenspan could tell me his policy for the next 2 years, and it wouldn't change what I do one bit. So good businesses are going to be good businesses regardless of Fed policy, I think. But although that's, but I get it, because when the Federal Reserve, right, when they raise rates, it's going to make like all the financial instruments and anything tied to finance is going to be less valuable when those rates go up present day. So, and then conversely, right, when the rates cut, things go up. So that's why everybody's waiting for that cut. All right, I am almost nice, Clifford. So we were talking about Manish Pabrai. So use limit orders. Yeah, I like to use limit orders too. I very rarely buy. Yep, I fully agree, Tim, with the Compound and Friends. Check them out. Fun podcast. That's what I like. I've had some talk with Ryan and Harris. I don't know when we're going to make this happen, but we want to do something like maybe once a month, I think, is what we're going to try and start out with. I think early next year, where we're just going to talk about a stock and one of us will present it and the other two will try to kind of do like the Munger, the invert, always invert, like find what's wrong with it or what might not be good with it. Good. I'm glad I'm not the only one. I think you mean animal spirits. Spirit animals, they could have another one too. But yeah, that's Josh Brown and Ben Carlson do animal spirits. So that's another one. I don't catch that one every one, but here and there I'll listen to it. So again, nice to know. Thank you. See, nice to know I'm not the only one that's remembers Chips. Did they remake Chips? I know they remade 21 Jump Street. Good. Thank you. I'm glad to see that somebody subscribed to Kevin's channel. I highly recommend him. The dude knows what he's talking about. He's been investing for a long time. What price would I buy additional Pepsi stock? I think it's a good price here. You know what? Let's see. Let me bring up just to see what Morningstar says for the heck of it. You guys could probably watch this with me. Let me hide your comment because I'm all caught up pretty much. So I will bring you, dear dividend investing viewer. Let me share my entire screen here. To this. So this was where we were at Schwab. So you would just go here, put in a good old pep, search on that. Well, let's see what they give them. This is just morning. Again, this is just an opinion, just what Morningstar will say. Let's see. 4 stars, wide moat, 11.6. So not too long ago, they put out this analyst equity report. Well, that's interesting. There you go. So they have a fair value estimate of 100 up here on the top left underneath the 4 stars. They have a fair value estimate. Well, see, this says as of October 11th of 180. So yeah, take it for what it's worth. That, yeah. Anyway, so there you go. Morningstar thinks it's about 180. Oh, we didn't do dividend news. Since I got you with me here, let me zoop. This is just Simply Safe Dividends, what they share. I think this was the first. There we go, the 13th. So this was a fun little thing we do. So Simply Safe Dividends, they have their latest. Now this is obviously there's gobs of news, but this is just what they share. So we have a little bit of fun sharing this. And again, if you want to read the little blurb here, then pause your video or go back. But Tyson, some of you been buying, raised their dividend 2.1% or 1 penny. 2.1% sounds better than a penny. Sun Life, ticker SLF, I don't know anything about them, raised their dividend 4% and 8.7% in the past year. They are from Canada. The New Skin, which sounds creepy, but they didn't buy anything. They were downgraded from 55 to 40. Personal care products with almost 9% dividend. Might want to be careful there. They downgraded Best Buy safety score, interesting, from 80 to 70 because their payout ratio is getting higher. Some company called Nikkei raised their dividend 8.8%, which is their 22nd straight yearly increase, approaching that Dividend Aristocrat. Don't worry, as soon as they approach Dividend Aristocrat, there will be a slew of Dividend YouTube videos saying the newest Aristocrat. Suncor, ticker SU, raised their dividend 4.8%. Sanofi, they reaffirmed the very safe score for the pharmaceutical company Sanofi. They refreshed on outlook on Gilead, ticker GILD, which they do treat HIV. UHT was downgraded. I was going to say I don't know much about UHT. Because UHF came from my brain. I know. They downgraded them from 60 to 50. It was UHT and an upgrade for Kraft Heinz. So the thing with Simply Safe is that these are just people. There's no algorithm doing this. It's all people that are given these ratings and these scores, manually reviewing all these businesses, which is why you pay a little more for their opinion. They upgraded Kraft Heinz, but they have a frozen dividend. Sirius XM, ticker SARI. So this is the only dividend stock that was added by Berkshire Hathaway. And of course, they have LSXMA, MB. They have all of them. I'm not too familiar how the difference with those works, so if anybody knows, but they downgraded their safety score. A couple more here. They refreshed their outlook on TD, Toronto Dominion, at 80 safe. And lastly, Hannon Armstrong, which I've never heard of this mortgage REIT. They reaffirmed their borderline safe score of 60. And there we go. And November 19th, good old Pep declared their next dividend, no change. Does anybody see those new Pepsi logos? You guys, if anyone wants to see it, let me know. Let me stop this. Come back to you guys. So there you go. There's a little bit of news. Yeah, I know, right? Okay, they made a movie of Chips. Good. I'm glad some of you people are my age too. Thank God. I remember the Green Hulk. I remember the Lou Ferrigno Hulk. Kind of scared me because I was a little smaller, little baby Chirin back then, but I do remember him and what's happening. And Yeah, Munsters. That's where my love affinity for like horror stuff started, was with the Munsters. See, they were a gateway drug, right? Okay. All right, all right, all right, all right. Jim, you're a wealth. We love you and your useless info. You'll always be welcome around here. Oh, TSN pulled that 8 months trick I just talked about. What was that I talked about with them? The slight raise? Oh, I know what you mean. I think you're talking about the dividend increase. So it has to be in a calendar year. So Celanese is currently doing this, where if you see a business in the first beginning of, say, 2022, if they raise it at the beginning of 2022, they have until the end of 2023 to raise it, because it's in the calendar year, from what I understand. So you could have 7 pushing 8 quarters go by and it looks like, hey, the dividend's frozen. But as long as it's a raise in 2022 and a raise in 2023, that's all they're concerned with. And it's considered a calendar year, right? So because there's 8 quarters in 2 years, so they could beginning of quarter 1 and then the last one in quarter 8, and it counts. So I think that's what you're talking about, Tim. A good dividend yield now with platforms like Webull and Robinhood paying 5% cash. Honestly, I don't know, because those can't be permanent rates. If rates start getting cut, I assume those are going to get cut too. And there's a lot of people, right, at the beginning of a shout out to Josh Brown talking about this. Everybody's like, oh, look at my 4 and 5%, risk-free rates. And it's like, yeah, but the market has gone way up more than that. So that's the problem, though, with Robinhood and Webull. I think they're really trying to bring more people in. And obviously, they need more people on the platform. Robinhood, I'm pretty sure Robinhood's going to get acquired. They're struggling a bit as a business from what I've heard and seen. So they'll probably get bought out by like JP Morgan or Morgan Stanley, something like that. I could see that happening. And covered calls paying 10 to 60%. It's unsustainable. I don't know how. I don't know when. I cannot imagine the yield max ETFs paying 60% consistently for the next dozen years or so. I don't think it's going to happen. Yeah, 5.1 CD from Ally, but you're getting that capital erosion, right? If inflation is even at 2%, then that's what a real return of 3.1, if my Cook County education tells me. So you're getting like a 3.1% return. It's okay, I guess, but inflation is just going to erode that. Like, your principal is not going to grow, That's just my opinion, but hey, some people want the income and they don't care. They'll take it. They don't want to risk. Teresa says the pharmaceutical stocks are volatile somewhat because drug patents expire after 20 years. Yeah, I did a video maybe pushing 2 years ago. I should do another one. I think it was on fiercepharma.com, org, whatever it is. They had a really cool report about the patent cliff for all the drugs that were expiring. And that's why we knew that Humira from AbbVie was facing the patent cliff. Stelara from J&J, Keytruda from Merck was facing the patent cliff. A couple others that escaped my memory, but those were like the big 3. And yeah, just, okay. Hey, Trevon, nice to see you making it back, buddy. What's up? Thought about Disney. They're in transition. They're struggling a bit. I don't know when Bob Iger is going to step back down, but they're going to be okay. They're going to, not excited. Dude, my kids, I even asked my kids about them and they said, we don't like it. There's no good Disney movies coming out. So, they got the parks, right? I guess. Yeah. Sam, yes. For any of those of you that may have just wandered on in. Yeah, I did sell Intel. Completely out of Intel. Completely out. Tim, don't worry, man. I am active on Twitter, not as much as I should be. I'm on at least once a day. I not like some of the other people that post, 20, 30 times a day. I try to, sometimes it backfires, but I try to do like something useful, helpful. To me, I'm trying to do more of the quality tweeting instead of the, like, what's your favorite stock? Intel's up 14% this week. Are you buying Intel? Do you like it? People just asking questions. Oh, good point. Yeah, Robin Hood burning the apes, Tim. If it's your bedtime, dude, go. 10 more minutes, we'll be jumping off. Just wrapping up with you. You love your yield max. Yeah. I don't know. That's so funny, dude. Hey, you know what? I'm saying, and I love it because I could be wrong. I'm skeptical. I don't know when it's going to happen. I can't see them doing this forever, but I guess we could sum it up as saying, I don't like it. I won't invest in them. And I want them to prove me wrong, which for all of those of you who are invested would be really good. So just my opinion there. Hey, and I haven't seen you around, Solity. Sorry, worked my accent in there. I don't have an accent. You guys are crazy. So let me know in the end here. What do you want to talk about? What are you buying? Do you have any questions for me? Let's go rapid fire them. Where are you spending Thanksgiving? I think I asked that. And if you don't want to tell that, what's the biggest stock you're looking at buying or selling this week? And what are you doing with Intel? Are you selling it? You hanging on to it? I know some of you have already shared. So I'd like to know what you guys are doing. For me, I'm buying more J&J. Yeah, Palantir. I don't know what they do, man. I've read it. The one thing that sticks out that I remember about Palantir is that they could become the Lockheed Martin of like cybersecurity for the government. That's all I know. I tried to look into the business and yeah, they were one of the ones. So like Harrow Health, which has been beaten down, but I see the path. I see the plan. I understand it. They're just stockpiling FDA approved pharmaceuticals for the eye, the ophthalmologic drugs. So anyway, Palantir, I don't understand it. And I hope you, do check out, she talks a lot about it, is Haley Eich. Here, let me type that. Haley Eich on YouTube. She has a lot about Palantir. So check her channel out. Definitely check her out. So I want to get to your, okay. What's your opinion on, oh, great read, thinking on selling. So I would ask, why are you thinking on selling? Like, what was your thesis for investing? Because for me, especially after acquiring Spirit Realty, it looks like they're like the blob, they're just getting bigger and bigger, and they're probably going to have slower growth. That's probably the one big knock, but I almost look at it as like a bond proxy, and a lot of other people do too, which is why when rates rose, they got hammered. But I think when rates eventually start getting cut, people are going to start flooding back into a lot of the REITs, a lot of the utilities, a lot of the bond proxies. So we'll see. But yeah, I'm not selling. I'm buying more realty income and holding. Buying more Main Street Capital, Realty Income, and JP Morgan. Very interesting. Oh, Drake, are you there too? Yeah. They train news anchors to speak like us. Hey, if you're going to go down by Wrigley, watch the Cubs play, maybe you're going to get a brat, you're going to go to Johnny's. Come on. This gets a lot. I can't do it. I know I have a Chicago accent, but we, yes, I do make the joke, and it's so fun. Like, speaking of Haley, she was such a good sport when I talk with her. She's in like near London. One of the first questions I asked her was, "What's it like having an accent?" That goes back to my Navy days when we would be like, "Man, you people all sure do talk funny." Yes, of course, we all have accents in our own special ways, except my cat. My cat, he doesn't. He's a good Christian boy. He doesn't have an accent. What that means, I don't know. Jim, you have more insight. I don't know what that means. I've not seen. No, he's not the one that has like the Jim Carrey haircut. That was Wasn't that the LA Raiders or the Vegas, now the Raiders? Uh, yeah, wasn't it the Raiders football team guy? I don't know. Diageo, that's an interesting one. I heard my Dividend Talk boys talking about Diageo. Yeah, as a fan of Guinness, which, by the way, in about 5 or 6 minutes when we get off of this, my wife will come down. We're going to watch some more Creep Show, the new series Creep Show, and I'm going to have a Guinness or two to wind down and end this week. So, as somebody who's doing their part to support all the Diageo shareholders, uh, yeah, I thought about that. I'd like to. I should. I should. I don't know what's going on with the business. I need to do more research. And do any of you do this? If you're looking at a stock like Diageo, I might buy a share or two because then I feel like I've got skin in the game and it's on my mind. I'm like, well, I own it now. I need to look into it. Where if I tell you, like, I'm going to look into Diageo, I got a million things going on and I won't. So we can always sell it later, but it's kind of like a placeholder to, Sam, I'll say that I'm sure Jim answered, but I'll say that Maine is probably a good price now, but it was much better at 38. Yeah, good Patel. That's cool, man. I'm sorry. Inside joke with my kids somewhere about Patel. I don't know if it's a comedian or somebody that I don't know. Never mind. That's something that should have just stayed locked up in the recesses of my mind. But with the exception of Google selling your non-dividend. Wait, I am selling my non-dividend paying stock in M1. Interesting. Schwab equivalents. Any reason why? Like, I know Schwab stays competitive with Vanguard, but you just want to get on the Schwab platform? PG right now, they are going to be, well, put it this way, Jay. I ended up selling out of, we did a video. I sold out of Procter & Gamble. We only had 10 shares at right around 150, right where it's at, because I just don't know how much bigger and quicker they're going to grow. So I thought because Target was in the 140s and 130s, that because it had a higher dividend, which I thought was sustainable, and I still do, I just thought it had more growth, and that was a while ago. But yeah, and then it got knocked down. So Procter & Gamble, just a bond proxy. Sleep well at night. I mean, it's all going to be your what am I trying to say? What you want to do with it in the future, like what your risk tolerance is and your goals and how young you are and whatnot. Kevin's trying to keep USPS off your back. All right, let me see if there's anything interesting that you guys really wants. What's MA? That's MasterCard, right? MasterCard and Vici. Yeah, increase that income, pay off debt too. I wish I would have paid off all my debts before I started investing. I sure wish I did that. Oh, look at this guy. Tim would rather go to the Metro Smart Bar. Yes. They do have some Neo. Shout out if nobody's going to remember Neo in Chicago. They have some Neo reunion parties there. I was just looking at the tickers. Like if I start talking about obscure Chicago nightclubs, there you go. It's just everybody's like, I'm out. No, I don't care. All right. Favorite utility stock. Well, right now I still have Duke Energy, and that's one. No hurry, but I'm thinking about if there's a better opportunity in that. I like Duke Energy. I know Ian Lopik likes Duke. He has Southern Comfort. Southern Company. Southern Company, not Southern Comfort. Boy, I don't even like that. That's we had a bad experience with Southern Comfort when I was on a port visit in Halifax, Nova Scotia, way back in 1997. Yeah, good. And you guys may understand Palantir. I don't, but I'm holding IIPR. I'm I think one day they'll be back around 100. And when it gets there, I'm going to reassess the position, but I'm holding at least till 100. Alex Karp, thank you. Cube, solid. I did a REIT video not too long ago. If you look in the past videos where I analyzed like over 100 REITs, got the information for them. used everything from Simply Save Dividends and their debt profiles. And CubeSmart, one of the things that we did with that was we took a look at their share dilution. So, right, we always say that REITs, that they issue shares because that's how they grow the business. But what does that look like compared to the AFFO per share growth? So Cube was one of the better ones. Oh, dude, look at this. Guys, we're joined by greatness here. Dividendology. What's up, man? Nice to see you in here. I know we chit chat sometimes on Twitter, but you made it in right at the end, buddy. I'm about to hop off. I'm going to do this when I jump off. I'll you know what? Let's do it. I want to see Alex Karp. We're all going to look. We're all going to look at Alex Karp right now. Let me pull up the Google machine with you guys and see what he looks like. Oh, by the way, and a lot of you'll jump off here. This was my I made this for Thanksgiving. Dawn Jackson Blattner, she's a dietitian that's always on WGN here. Sweet potato fudge. It's only 2 ingredients. You got sweet potato and dark chocolate chips. So Google that if you want. But we're going to google.com and we're going to look up Alex Karp and then we're going to hop off here. I got to see what this guy looks like. So far, I don't. Where's the images? Let's see. Okay, he's like another. He looks insane. He looks like somebody that. All right, there you go. All right, cool. Like, kind of reminds me of Egon or something from Ghostbusters. You know. Well, good for him. He's doing him, and he's probably worth a lot more than me. Here's me laughing at him. I'm like, you know. All right, so that was fun. Good. I'm glad you guys could tell Dividendology love him. So, Steve, man, sorry, I got to jump off. We're way past time here. I really want to keep these. Check out Dividendology. He's dude's gonna be over 100K subs soon. Like, young man, fantastic, and sub to his channel. Guy knows what he's talking about for somebody that's in their 20s. I hope you don't mind me saying that. So, check out Kevin's channel, all the Dividend channels. I appreciate that. Gotta hop off. Keep these at an hour. I got a Guinness or two to take care of before I go to bed to start another week, Thanksgiving week. So enjoy it with your friends, family, loved ones. If you don't have any friends, go out and make some. We got the internet now. Find somebody to make a friend with. I love you guys. Come back next week, and we will do it all again. So long, everybody.